You talk all the time about this great wealth transfer. Well, if it's going to happen, and I can't control whether it's going to happen or not, what I can control is which side of that transfer I'm going to be on.
Yes. Hi, we're here on one of the speaker stages at the Limitless Expo in Dallas, and I've got Russ Gray with me, and we go back a long ways. And Russ, you reminded me, and Robert Kiyosaki reminded me, that I used to have a nickname back then. What was it?
I'm not sure that it's still used to. I mean, Kiyosaki still calls you it, but Angel of Death. You're the Angel of Death.
And this is because I would get up on stage and present all of this data about bubbles and things like that, you know, predicting a crash. And so it was all depressing stuff for most of the audience. Now, I was seeing this as a very exciting opportunity, that things were about to shift and alternative investments were really going to pay off. And so anyway, it was very interesting. And Russ has some very humanitarian takes on these waves and cycles that humanity goes through. So can you tell us about this again?
Absolutely. And just as a reminder, he was right. When you started doing this, gold was $2,500, and now it's $250.
Right.
Now it's $2,500, which means that the dollar since you started, has lost 90%.
Exactly.
Yeah, so 100% right. And if people understood that that was going to progress, then the move into tangible, real assets versus storing wealth in currency is obviously the right move. And you can't know that unless you're willing to acknowledge the problem. And I think sometimes people look at the problems and they think the problems are terminal. They think that because a system breaks down or there is some major reset, that it actually is like the end of the world. And when people, I mean, we're friends with Peter Schiff, he's another guy, same thing. He's constantly focusing on the problem. And I think that's important because the flip side of a problem is an opportunity. So you got to step back and say, okay, if this is not terminal, if there's still hope, then you got to set your mindset to understand that humanity's going to figure it out and you can figure it out too. So I thought about it and I thought, well, you know, my grandmother was born in 1918. That was the year I think we got into, or just as World War I was ending. This was the Great War. This was the most traumatic event in modern human history, 1918. And so she went through her grade school years in the 20s, the Roaring 20s, which ended in the Great Depression. And so now she's in this arguably the worst economic event that had happened in the United States up to that point. And that's where she went through her teenage years. At the end of that, in 1939, my mother was born. 2 years later, there's my grandmother with a 2-year-old daughter, and the Japanese bombed Pearl Harbor, right? And so now we're in this second Great War. This is major trauma.
Yeah.
Now my mother grows up and has me. I was born in 1960. She's looking at the Cuban Missile Crisis. We were getting nuclear weapons after having seen what happened in Nagasaki and Hiroshima in the 40s. The nuclear weapons, when I was a kid, it was duck and cover. I'd go to grade school and we would practice hiding under our desks in case a bomb went off. Yeah, it's just kids, right? We're living life. Okay, it's time to duck and cover, you know.
And so then I've got to say something here because it just made my mind go to Lewis Black. You know, he's a comedian. He'd be on stage and he's going, you know, they had duck and cover when I was a kid. And the desks were made of wood. And they're telling us to duck and cover under kindling from a nuclear fireball. Anyway, go ahead. I'm sorry.
So then, you know, I'm 3 years old and the President of the United States gets assassinated right here in Dallas, where we are today.
Yeah.
You think about all that trauma. And then we have all the race riots and everything going on. Plus they confiscated the silver with the Coinage Act in 1965, right? And that's all in the 60s. What I'm here to say is, and then in my life, we had Nixon taking us off the gold standard. We had the stagflation of the 70s. We had the Vietnam War. We had the Nixon disgrace and resignation. This is just the 70s, right? And then you get into the 80s and we have interest rates at 18, 19%. You know, we have, and then the beginning of Reagan's new dawn, but it was also the beginning of huge out of control debt because the dollar was no longer tethered. So what I'm saying is that during all of that, if you were prone to believing that the problems in the world were terminal, we would have terminated a long time ago. Right.
Right, and you also miss out on all of the opportunity because you sort of close your mind off to being able to recognize an opportunity.
Right, and
You're just sitting around
really
waiting for
is
the
the
world
key
to
point.
end. Right.
Yeah.
Yeah, so I didn't view myself as the angel of death. I viewed myself as the angel of opportunity when things shifted.
And that's because the fundamental belief I think everybody has to have, that I've adopted because I've been through some tough times, is that the flip side of every problem is opportunity. And the more you study the problem, the more you're going to be able to recognize the opportunity. And I've been around very successful people, and they say, oh, pessimists can't be successful. These people aren't pessimists. Just because they're talking about the problem. Peter Schiff isn't a pessimist. I would argue he's a realist. Sam Zell, arguably a much bigger real estate investor than Donald Trump. He's now deceased, but he had a huge real estate empire. And he wrote a book called Am I Being Too Subtle? And in that, he goes, look, everybody can see the upside, right? There's no genius in being able to see the upside. The genius is being able to see, what he felt his genius was, is the ability to see the downside and then come up with strategies to mitigate the risk that he was willing to look at so that he didn't get blindsided, right? There's a lot of people that they're optimists and they run right into a brick wall at 100 miles an hour because they won't even admit there's a problem. Then you have pessimists who aren't so afraid to do anything, they can't see the opportunity. So you got to be there in the middle. And I think, Mike, you've done a great service for people that have been willing to look all the way through. But I just encourage you, when you look at the problems, don't stop believing in humanity. Don't stop believing in your ability to read and react. Work on that skill. Get around other people who are also doing the thing. Listen to smart guys like this that are paying attention, and then trust your own gut, trust your own judgment, and then take action. Because if you don't take action, if it's all theoretical, then it can't help you. Right? There's people that listen to you way back in the beginning when you're saying gold, 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 and they didn't do it, right?
Right.
And then at 1,000, you're like, gold, 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 they didn't do it, right? 1,500, no, gold, 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 they didn't do it. And now here we are, 2,500, arguably maybe still in what you would call, if you denominate wealth in currency, you'd say it's a bull run. I would say it's a bear run of the dollar, and the gold is just going to sit there, but it's going to take more dollars to buy that gold.
Well, it has gained in purchasing power, though, even against real estate. But especially it's outperformed the stock market by triple in percentage terms. So that means the stock market fell by 2/3 in percentage terms, measured in gold. So it sure has been an exciting ride. And the thing that I enjoy most is being able to give people a different way of looking at things, so that everybody's used to measuring things in the U.S. dollar, and then you hear all the stuff from mainstream media that just seems to be a distraction as far as all the noise that's happening right today, and keeps your eye off of the ball of the big things of what's happening. And
well,
so,
I think you have to think about where mainstream media's financial model is. And they make their money off advertising. And so there's certain things they just can't talk about because it doesn't fit the model of the segment of the financial economy that they support, which is Wall Street. And so that's why everywhere you go, you see the stock ticker going. You constantly, everybody's quoting stocks. The Dow's up, the Dow's down, whatever. They never talk about gold, very seldom will they talk about gold. And the other thing they never talk about is counterparty risk. And they never talk about currency risk. They always denominate whatever they're doing in the dollar, which is fluctuating wildly. Right? Can you imagine, I've learned this from Steve Forbes, can you imagine trying to organize your calendar around an hour that was fluctuating in value? Right? So you and I are going to make an appointment, and it's like, okay, we'll meet in 2 hours. Is that 2 hours that are worth 75 minutes, 2 hours that are worth 60 minutes, 2 hours that are worth 40 minutes?
Is it an inflation-adjusted hour? Is it a California hour? What? We animated, he in Hidden Secrets of Money, he went through that entire scenario. What if the foot changed? And so we animated that whole process of inflation-adjusted hours.
Well, there you go.
The size of the inch changing while somebody's trying to construct a house. It doesn't quite work.
Right. So, it creates distortions.
Yeah, and that's what we've got today. It's amazing. So any more on the societal changes that you've seen?
Well, I think that every once in a while things happen that are really profound in human evolution. The wheel, fire, the printing press, the internet. Now we're here with AI. And I think that we need to pay attention to that. There's a lot of fear surrounding AI, and I think it's prudent to take a look at what could be the dark side. There's going to be a lot of opportunity. The cure, if there is a cure, at least a temporary kicking the can a little bit further down the road to the dilution of the dollar's value, is going to be an offset with productivity. I read an article that Alan Greenspan commented back in the 90s when he was justifying his lowering of the Fed funds rate down to 1% as they were trying to create liquidity for to deal with Y2K. And I was in Silicon Valley at the time, and a lot of that money was coming into Silicon Valley, and we were seeing it in the real estate prices and salaries, and we were printing millionaires, you know, with like 60 millionaires every day or something ridiculous like that. And I think that I lost my thought, Mike. I mean, so what he said was, he goes, the reason we're not seeing inflation due to my policy is because technology is muting the inflation. And what I sat and I thought about that, and I thought, you know what? What he's really saying is the natural deflation that should occur through productivity gains and efficiencies are being stolen from the public. The companies aren't getting the profit margins they have. They can't give the raises they would normally give to the employees. They can't lower the prices to the customers. They can't create the profits to invest in further productivity gains. And of course, you know, real estate investors understand the concept of deferred maintenance. If you buy an apartment building and you know that roof is going to go out or that parking lot is going to need to be replaced 20 years down the road, you got to put something away every day to get ready to do that. So I think our economy has been largely distorted, even going back to the things that Alan Greenspan was doing, by using the productivity gains of technology to absorb the benefits of productivity. And so instead of a price going down, it just didn't go up. But all of this was lost. And those investments 20 years ago, 30 years ago, didn't get made today. So gains in energy technology, and I think maybe gains through AI, could potentially kick the can down the road a little bit longer. What we really need to do, in my opinion, I don't know what you think about this, Mike, is we need to really fix the system. The money system today is fundamentally flawed, and until we fix that... It's not just
flawed, it's evil.
It
is absolutely
it's all debt,
evil.
borrower,
When you
servant to the
really
lender.
dig into it, it's created as a wealth transfer from the many to the few that actually run the system.
Exactly.
And
And the way you recognize it is to study history. Our mutual friend Robert Kiyosaki says, if you want to see the future, you have to study the past. And I spend a lot of time doing that. In fact, I was telling Dan that I've been reading, my wife has a home in Sedona, Arizona. And so she's really, really into it. And so I started buying books about the history of Sedona. And I found out that the town is actually named after a woman whose name was Sedona. And her husband, Carl Schnebley, kind of founded the town because he became the first postmaster back in the 1800s. She was born in 1877. And so they needed to name the town post office, and he gave a couple of names, you know, that were longer, and the postmaster general said, no, they're too long. And he goes, well, just name it Sedona. So he ended up naming this town after his wife. It's just such an amazing thing. But she kept a diary, and she was born in 1877. And so I've been reading my wife the diary. And it's fascinating because you're reading about the life and the viewpoint of a woman that died 74 years ago at 73 years old or whatever she was, born in 1877. She literally was born only 12 years after the Civil War. And so she was writing, kind of coming into her own in the early 1900s. And you realize that people are people, and they're all working on commerce. All of humanity is organized around economics. And they had their own little economic structure back then, and they had to put in infrastructure, and they had to trade and all that. But she also talked about the things going on in the world, and the scars of the Civil War were kind of fresh, kind of like the scars from the great financial crisis for a lot of people today are still kind of fresh. It was only about 15 years ago.
Mm-hmm.
And again, that just is a different way of studying history. I'm not really studying a history book. I'm not studying events. I'm listening to the narrative of an actual human being, just a regular Main Street, everyday person, talking about what's going on in the world and the things that she and her family were doing to survive and thrive in the midst of all that. And I realized, for all of humanity, humans have, at the smallest unit, a family, an individual, have had to figure out, no matter what's going on in the world, they've had to figure out how to survive and thrive. Yes, our society's gotten more complicated, but at the end of the day, it all comes down to an individual taking action, controlling what they can control, and then reading and reacting to what they can't control. And the difference is, today, we know a lot more. And even though that scares us, it's actually an advantage. They would sit there in Sedona, Arizona, and they would have to wait weeks for the train to deliver the mail. And so there were things going on, and their communication cycles were weeks and months, whereas we get information in real time. So our ability to read and react is actually better. But the context of just understanding the human experience, that's kind of timeless. And I love to read history, because when you see how people handled things in the past, you can glean things that you can use today. And I think that more people really should study history. You and I have that in common.
Right.
We study economic history, and I think it helps us see things coming before maybe other people do.
Yeah, and you said most people don't realize that their life is governed around economics, and their decisions, they think that economics is some esoteric thing that these ivory tower people should deal with, and they're just dealing with day-to-day life.
Right.
But they aren't. Every decision they make on what to spend on and what not to spend on, it's economics that governs their lives, and they're creating their own economic world. And so it's the majority of their life really is dealing with economics. And the more you understand it, the better you can do, the more you prosper.
Yes, and because human society is organized by leaders or people that are put in positions of power to kind of organize the infrastructure that supports human society, those leaders are going to make decisions based on policy. And if you don't understand the connection between policy and economics, it's very easy to vote for policy that is bad economics. Peter Schiff tells me all the time, good economics is bad politics, and bad politics is good economics. And the point is, you get bad policy from bad economics from politicians because of that. And the reason we get bad politicians is because people, I think, who don't understand economics end up voting for outcomes that sound economic can't produce. And we're on the threshold of that right now. I'm not trying to tell people who to vote for. I'm trying to get you to understand, if you will study economics, then you will begin to recognize which policies are most likely to make your life harder. And we're already seeing that. There were policies that have been implemented in the last few years that have dramatically changed life on Main Street because of the economics of those decisions. And they might have seemed like a good idea in the beginning, but the end game turned out to be bad. And if you don't understand that connection, you may end up walking in that same circle again and ending up with the same result. So I really encourage you, study history, study economics, and you will recognize the good policy from bad policy based on the economics. So it really is.
Yeah, and how it's going to affect your life in the future. Milton Friedman used to say that policies should never be judged on their intention. They should be judged on their outcomes, because usually the outcome is exactly the opposite of what the intention was. And then they give it some flowery name, and it ends up producing the exact opposite results.
Yeah, well, I mean, you're going to make, let's say, for example, somebody creates a policy and says, we are going to make college education more affordable. And so the policy is, we're going to issue federal loan guarantees so that the interest rates are low and there's abundant money available, because people can always put the loans to the federal government, who has an unlimited balance sheet. And so they do that. And so they think that's going to make school affordable. It has the exact opposite effect because it pulls the purchasing power of the future into the present and bids up the cost of the school. We have a proposal right now, hey, let's give everybody a $25,000 down payment to help them buy a house. It makes the house more affordable. No, it will make the house $25,000 more expensive. Right. Because that's what happens. And so if you don't understand the economics, the policy of making education available to people, the policy of making housing available to people, the intention is great. And I'm not going to impugn anybody's motives. However, it's bad economics, and history right. shows us that it doesn't work. And the examples are replete if you study.
Back in like 2013, I was speaking in Australia, and they had all of these stimulus things for real estate, just like you said. And I showed that, you know, they came out with this grant that you could get. I can't remember if it was $25,000 or $50,000 or something, but within months, that's how much housing jumped, was the same amount as the grant. When you give a whole bunch of people a certain amount of cash suddenly, they bid up the price. They're all competing against a certain amount of homes that are available, and they bid up the price by the amount that they can afford. And they can now afford this $50,000 more. And then they followed it up with another grant. And there's this stair step of government-induced affordability grants that made it unaffordable.
Right. It's literally the arsonist wanting to come in and claim to be the fireman.
Right.
They're pouring gasoline on the fire. And again, I don't know that they do it on purpose. Doesn't matter. It doesn't matter. See, there's a difference between studying policy and politics. Politics is Mike and I arguing about the way things should be. Policy is a matter of looking at the decisions that the people make and the consequences of those policy, whether we agree with them or not, right? Joe Biden, Donald Trump, Kamala Harris, none of these people are calling me up and going, hey, Russ, what do you think? They're not calling me. I get to vote. Okay, I'm going to vote. But at the end of the day, you know, does my vote really move the needle? I don't know. I'm not here to say you shouldn't vote. All I'm saying is what really matters is what do the people who have their hands on the levers of control think? What do they believe? How do those actions manifest in policy? And how will those policies affect me? The only way I know is to study history. Stock investors, you do the same thing in gold. You look at the charts. What happened in the past? When this pattern occurs, this is what's likely to happen in the future. Right. The same thing's true with policy. When this policy is implemented, what happened in the past? All right, if they do that policy again, a similar policy, what's likely to happen in the future?
And here's the thing, we have enough data now. Like if you look at the Economic Freedom of the World Index, the data is now 165 countries that produce reliable economic data, and they've been doing this since the mid-60s. So you have this huge data set that sort of proves, it gives you the results of what policies create prosperity and what policies cause poverty.
That's right.
And we still ignore all of that information, data, and proof, and we still select things that cause poverty because it sounds good to voters.
Yeah, well, and the other thing is you have an entire financial industry that it cannot admit the counterparty risk, the currency risk that's all over the system, and their whole game is buy low, sell high. And the problem with that is the pricing structure is based on comparative sales. So if there's 100 million shares of Apple, I know there's a lot more than that, but let's just say 100 million, and some guy sells 1,000, well then all those other millions of shares are deemed to be the same price as those 1,000. And so that's a lot of air in the balance sheet. And so people think they're wealthy because they have equity on their balance sheet, but they don't have any cash flow. Our mutual friend Kenny McElroy is really all about cash flow. And so they're able to have you have a sense of prosperity and that their system, their game is working. But meanwhile, they're producing cash flow by creating transactions, right? If you go buy low, sell high, you're going to do a transaction and create a commission on the buy. And then when you sell, you're going to create a commission on the sell. In between, you're going to create a capital gain, which is going to generate tax. And then you're going to create cash, which goes in the bank where they get to lever it up and use it, right? What do you get? You get a pile of currency they're printing into oblivion, and you're losing purchasing power unless you play the game again.
Yeah. You mentioned counterparty risk, and part of my presentation I was showing that gold is up almost 900%. The S&P 500 is up almost 300% from the day gold bottomed in 1999 at $253 an ounce to today. And so gold has outperformed the S&P
How come
by
I didn't know you in 1999, Mike?
Gold has outperformed the S&P by a factor of 3, roughly. And it's something that you can hold in your hand that can't go broke, and I pointed out, has no counterparty risk. If you had some of those S&P 500 stocks in 2007 and your brokerage house was Lehman Brothers,
Right.
that requires the performance of a counterparty to make those good. In 2008, your portfolio, everybody else lost in the crash of '08, but you lost 100% if you had your brokerage account at Lehman. And so everything requires the performance of a counterparty, with the exception of a few things, and one of those is gold.
Yeah.
Gold and silver.
Yeah, and that's just owning things that are real, owning
Yeah.
things that are essential, owning things that can't be taken away from you and don't depend on anybody else to perform.
Right.
Right, and so they can't talk about that because their system requires all of those things.
Yeah.
And so, we're preaching to the choir, right? Here they are, they're watching this, right? You guys are the right kind of people because you're doing what you need to be doing. You're getting self-educated. Hopefully you're asking critical questions. I mean, if you said something we disagree with, like put it in the comments, tell us. I'd love to come back and address those things. I've been studying this a long time, and candidly, it's because I got blindsided. I got wiped out. I did a show with you. Talked about that in 2008 because I thought I was a Main Street guy and all that stuff going on Wall Street didn't matter, but it all rolls downhill. Mm-hmm. And then I realized it wasn't Wall Street, it's actually the policymakers behind all that. And so now I've kind of moved up the food chain trying to figure out, like that old game of mousetrap, when you put a wheel in motion or you move that little silver ball and it's going to come down the thing. I want to know way ahead of time so I have time to get out from underneath that trap. You talk all the time about this great wealth transfer. Well, if it's going to happen, and I can't control whether it's going to happen or not, what I can control is which side of that transfer I'm going to be on.
Yes, right. Yeah. On that, I think we should wrap it up. This has been absolutely wonderful. You've got an amazing mind, and we're going to do more of these. By the way, tell people where they can find you.
Yeah, so I'm going to be launching a show shortly. Haven't done it yet, depending on when you see this. But if you send an email to follow@russellgray.com, RussellGray.com, you can follow me, and then I'll send you information about where I am and what I'm doing and what I'm talking about. If you like it, you can keep following me. If not, you can always unsubscribe.
Thanks. We'll see you next time.